Good morning, I'm Peter Hunt and this is Kiwibank Markets in a Minute, coming to you on Friday the 4th of October. Okay, three things we want to talk about. So first of all, the World Trade Organization has finally come back after 15 years and said that the US can retaliate on the European subsidies that have been going into Airbus. That's seen the US immediately retaliate with countermeasures. So Trump's now fighting trade wars on two different fronts, and he's slapped 10% tariffs on large planes out of certain countries, 25% on other goods, including wine and cheese, and it really does open up this trade war that we're in currently. Secondly, data, it's been weak again, so we've seen services data come out of both the US and Germany. Both came in at around 3-year lows, so the US data was around 52.6 and the German data was around 51.4. This followed up from pretty weak manufacturing data yesterday, and it just continues to paint this pretty gloomy picture really on global growth. Thirdly, well, what does it mean for the markets? Perversely, because the data has been so soft and the trade war has accelerated, you've seen a pretty strong rally in US bond yields. So the 10-year, for example, is down around 7 basis points to 153, and that has now fallen for 6 days in a row. You're also seeing really heightened expectations of rate cuts coming out of the US, so we've got an 85% chance of a rate cut of 25 basis points in the US coming out later this month. There's around an 80% chance of a further cut by the end of the year in December, and they've also got another possibility of a further 2 cuts priced into the middle of next year, taking their cash rate down to the low 1%. So pretty dramatic easings being priced in for the US. Given they've got a bit more room to go than some of the other economies, that's actually seen the US dollar weaken and currencies like the Kiwi a little bit higher. So we're opening up this morning around 63.05. So some small respite for the Kiwi as the US now is sort of taking on the lead, if you like, in pricing lower rates. But in the context of things, the Kiwi's still down around 9% over the last 12 months. Okay, have a great day out there. Thanks.